Good evening, family. How's everybody doing today on this Tuesday? Hopefully, everybody's doing wonderfully blessed wherever you're chilling at in this beautiful world that we live in. This is your boy Jaime G, and we're about to dive into some crypto market news. Now, none of this is ever financial advice. It's just me sharing my thoughts and opinions, nothing more, nothing less. Now, for those of you that don't know what time it is, your boy usually talks about Doge and crypto overall crypto market news. But today I'm going to do a little something different. And I'm actually going to just merely talk about Bitcoin today, guys. All right, guys. Now, if you guys are ready to find out what's going on in the wild, wild west of crypto land, well, without further ado, let's get it and dive into the markets. Now, as you can see, guys, the top 100 on CoinMarketCap, guys, obviously in the red. Granted, there is a scarce few, there's a chosen few rather that are in the green, right? But nonetheless, the overall markets are in the red. They took a nasty dip since last night. Why? Because the alpha Bitcoin grandpa, the daddy, right? He is in the red. Why? Because we'll dive into some articles that kind of correlate on what I'm thinking, right? And as far as I think partially part of the reason why Bitcoin took a dip was due to taxes, people trying to lock in profits towards the end of the year. And like I said, maybe to have liquidity, to have money to pay taxes, right? Especially those institutions that have millions or billions of dollars worth of crypto assets. All right, guys, we'll dive into that here in a minute, and we're going to dive into the charts as well. Talk about levels of resistance and support. All right, guys, Bitcoin is currently sitting at $47,971. It is down 4.3%, guys. Obviously, it still ranks number one, right, on CoinMarketCap. 24-hour low was 47,414, and the 24-hour high was at 49,948. Market cap is sitting at 906.3 billion, and trading volume is at 32.7 billion in the last 24 hours. Now let's dive into the charts and see what's going on. Okay, so this is the daily time frame. Okay, guys, so obviously every candle here represents a daily, and that's what I'm going to be looking at only. Okay, so as you can see, I have three circles here, right, guys? Now this one right here, right, was 23 days ago, and as you can see, it hit that blue line, which is a level of resistance coming in around $52,000. As you can see, we got rejected, right? Then we came down, kind of bounced around in here. We touched all the way down to 45K, which is a level of support, right? So it's around 45,600, right? So I'm just gonna say round it off to say $45,000, right? Is where we have very strong level of support, right? And then we bounced back up to 7 days ago, and we tested 52,000 again. We got rejected, and then we kind of consolidated right here for a couple days, and then 3 days ago we tested right here once again that 52,000 level of resistance, and got rejected and came all the way down to 47,400, and then where we're currently at right now, sitting at 47,000 and around 700 and some change, right? So I say all that to say this: around 52,000, which is this blue line here, is a level of strong resistance, and this level down here, right, the blue line, is around the 45,000 area, which is support, right? So if we dip any lower than 45K, you know what I mean, then we can possibly drop all the way down to about 40,000, but that's for another video. But as of now, I think we're going to just continue to bounce around to the end of this year inside this channel here between 45 and 52,000. All right, guys, now that's what I had as far as the charts go, right? Now let's dive into some fundamentals here, okay, guys? Now here, this article here kind of correlates with what I'm thinking about locking in profits, you know what I mean, and institutions trying to have some money to pay their taxes, right? Now it says institutional investors may have already locked in gains for the year, but analysts are bullish for that 2022 will bring more lucrative returns. Now it goes on to say in early December, it says in early December, Bitcoin lost much as lost as 25%, just over 24 hours. Based on the sell-off, it is likely that institutional investors may have sold high volumes of cryptocurrencies and secured profits before December 31st, analysts say. Then it goes on to say, right, Daniel, right, from CMH Holdings says, I think it's kind of to be expected. There are a lot of funds that have a ton of money. There's definitely some LPs that are pulling money off the table for those funds. Now that LP stands for liquidity pools, right? Liquidity pools. And there are definitely people selling to lock in carry too. Now it says institutional investors interested in digital assets, namely Bitcoin, picked up in 2020. and continued into this year. So for the past 2 years, there are several reasons large investors may be selling towards the end of the year. Michael Buscella, the general partner at Block Tower Capital, said, including tax purposes. Exactly, guys. Right now, says a lot of people that came into the space in the last 2 years may be selling down to basically have liquidity to pay a larger tax bill, right? Or they're seeing that their crypto, that crypto is all of a sudden 20% of their allocation, right, or of their portfolio, and they are not comfortable with that level. So in other words, guys, maybe some people started off at, say, 1% of crypto, right, and maybe they were more invested into say the stock market, right, and they in the last 2 years allocated up to about 20% in crypto, and now they're not comfortable with that, right? So now they're selling off and getting rid of, and they're kind of rebalancing their portfolio. Right now, it says Buscella said, I think that there's a lot more institutions going from 0 to 1 or from 1 to 2 in terms of allocation. That there are people that are rebalancing. So I think the actual effect of that, once you account for inflows next year, will be diminished, right? So it says institutions are not making any more big moves before the end of the year, Matowski said. Right, guys, so that's pretty much what I thought as well, right? It's kind of, you put 2 and 2 together, right, equals 4. So, I think a lot of institutions are continuing to sell, and that's why, we got rejected at that 52,000 a couple days ago, right? Because people are locking in profits and also making money for to pay off taxes, right? Now, let's dive into this, or actually here, now I got a lot of bullish news, guys, for Bitcoin, which is good for the overall crypto markets, right? Now, it says here, over $80 billion outflows crypto market in 24 hours as Bitcoin slides below 50K. Now, what does that mean? Now, this article will break it down for us and tell you what it means, right? Now, it says, in only 24 hours, a total of $83 billion was wiped off the global market capitalization, which plummeted from 2.94 trillion to a current 2.311 trillion market cap, right? Despite a decline in total market capitalization, the entire volume of the crypto market has increased, guys, by 34%, not decreased, increased, totaling 99.45 billion. DeFi's total volume is now 17.76 billion, or 17.86%, while the entire market volume of all stablecoins is 77.46, or 77.89%. Guys, so what does that mean? That regardless of the market taking that dip for about 4,000 from 52 all the way down to 47,400, the volume in the crypto market has increased. So more money is going into crypto, right? Because why? People are buying the dip, guys. Why? Because they know crypto isn't going anywhere. This is the beginning stages, right? Now, here's more bullish news. Now, it says Bitcoin long-term hodlers stay strong despite 20K drop from last month's high. Now, what does that mean? That means, guys, just what the prior article was saying, right? That people are still bullish regardless of the dips, the roller coaster rides in crypto. Why? Because people believe in the asset. They obviously believe there's money to be made in the long term. You got to think of the long term, guys. Yes, we want to make money overnight. I know I do. But the reality is that the longer you hold, the more money you will make, right? And hopefully become that crypto millionaire, right? So the article goes on to say long-term holders marginally trimmed their Bitcoin positions in recent weeks despite a sharp price drop. Data from analyst firm Glassnode shows. It says the leading cryptocurrency by market capitalization failed to break the 52K level on Monday and slipped to 49,300 in the European trading hours. Bitcoin prices have fallen almost 20K since November's 2021's high of over 69K. However, analytics show the supply held by investors has only dropped to 13.3 million bitcoins from 13.4 billion bitcoins, a marginal chance considering the massive drop, right? So from 13.3, guys, to 13.4 to 13.3, that is like a minute little drop, guys. It says the absorption of Bitcoin from sellers could be bullish. Such on-chain behavior is more typically observed during Bitcoin bear markets, which in hindsight are effectively lengthening periods of coins distribution from weaker hands to those with stronger and longer-term convictions, explained Glassnode in Monday's newsletter, right? Now, Glassnode categorizes long-term holders as wallet addressing holdings Bitcoin greater than 155 days, period of a time frame beyond which holders are statistically less likely to spend their Bitcoins, right? So It says the recent reduction in long-term holdings looks like a rounding error compared with what investors added in 2021. Data shows long-term holders have added 1.8 million Bitcoin to their account since January, while short-term supply declined by 1.4 billion in the same period. Some long-term holders haven't touched their Bitcoin in over 5 years. Right, guys? So what does all that mean? That basically sums up to say that people are bullish on Bitcoin / cryptocurrencies and the overall crypto market, right, guys? And they continue to hodl regardless of the dips, the ups and downs, right? That's what that means to me. Now, here's another freaking bullish article. If this doesn't convince you, I don't know what to tell you, man. Now, it says 2021 was a year of Bitcoin accumulation as long-term holdings rose by 16%, right, guys? Now, I'm going to just briefly touch on it. I'm not going to read the whole article. It says, as per the latest weekly report from Glassnode, Bitcoin short-term supply has gone down by 32%, while long-term holdings have risen by 16% in 2021. Right now, short-term, it breaks down. Okay, I'm not going to read all that. Now, it says, as you can see in the above charts, it says long-term supply seems to have seen immense rise recently, while the short-term supply has declined. Guys, now it says there are two types of supply in the chart as well. It says the first is a sovereign supply, which measures the total amount of Bitcoin circulating outside exchanges. This metric is currently at an all-time high of 16.34 Bitcoin. Now, what does that mean? That means that's basically like retail holders such as you and I, right? Those are the sovereign supply. The other is the exchange reserve, right? That's basically like crypto.com or coinbase.com, their wallets that hold multiple retail investments, even some institutional investments as well, right? Now it says the other is the exchange reserve, and an indicator that tells us about the total amount of Bitcoin currently stored in wallets of all exchanges. It says the long-term held supply currently sits at 13.33 billion or million. Bitcoin increased 1.864 million or around 16% over the past year. Now, all of that means, guys, like these three articles in a row, right? They all correlate, and they all basically are saying that people continuously are bullish on Bitcoin regardless of it going down 20k from its all-time high of 69,000 to where it's sitting at now, guys. You know what I mean? If this doesn't convince you, like I said, I don't know what to tell you guys, man. Bitcoin, cryptocurrencies are here to stay, and this is just the beginning stages, guys. You know what I mean? And it's not going anywhere, man. The sooner you guys get this through your head, the better, right? Now it says almost 20,000 new Bitcoin ATMs installed in 2021. That's more than 50 ATMs a day, guys. Now it says here, according to data acquired by Finbold, as of January 1st, 2021, there were 14,040 Bitcoin ATMs in operation. As of Tuesday, December 28th, which is today, there are 33,850 ATMs in action, representing an increase of 19,110 ATMs, according to the statistics provided by Coin ATM Radar. It says, bearing in mind that not all Bitcoin ATMs are being tracked by Coin ATM Radar, the true number might be drastically higher. Right, guys? That just goes to show you, right? There's a demand, right? You can buy more than just Bitcoin with these ATMs, right? You can buy Bitcoin Cash or Dogecoin, right? There's other cryptos, but the point being is the demand for people wanting to withdraw or to buy cryptocurrencies such as Bitcoin or Dogecoin through via ATM machines has gone drastically up. Just think about that, guys. Over 50 ATMs per day. That's freaking insane, man. It goes to show you adoption is moving way faster than what people are realizing, right? Now, I'm going to close out with this article or this little short video here, right? And this is out of Noelle. She's from Genesis, and she's talking in regards to institutional investors, right? Because she tracks it, so on and so forth, right? Now, here is her take of what's going to go for year 2022, and this is out of Squawk Box. Now, here you guys go.
We do a look back usually, and then we also try to do a look forward. What in the crypto world, what are the big things to think about for 2022? Whether it's a physical ETF for Bitcoin or institutional adoption of Bitcoin or regulatory.
So, hopefully you guys are with me till the end, and you guys have a wonderfully blessed day. This is your boy Jaime G, and hit the likes, guys, or the dislikes.
That's very, very true, Joe. No one does. And as you said, bring on 2022, right? Because 2021 sure was interesting. Great to be here with you. Thanks for having me. I do have to say that nothing I say is investment advice. These are my opinions, not those of my employers. But back to your question, Joe, what are we going to be looking for in the next year? We expect a continuation of institutional involvement. We're seeing that. I mean, just the institutional growth over the past 12 months has been astonishing, and we're seeing strong signs of that accelerating over the next year, both through direct token investment and through investment in the crypto market infrastructure companies themselves. We saw the birth, Joe, of 60. We have 65 unicorns, 40 of which appeared this past year, in the past 12 months. That's an average of 3 a month. That's quite astonishing. And that kind of investment in the industry, directly in the companies, is likely to accelerate given the amount of money out there looking for returns and also given the lower perceived risk. We also are seeing a greater interest from the institutions in a more diversified crypto portfolio. A year ago, Joe, you remember this, used to talk about it, Bitcoin, Bitcoin, Bitcoin. That was all they wanted to talk about. And then maybe ETH if they were feeling really daring. But now many investors are bypassing the two major cryptocurrencies directly and going to some of the riskier, but also higher return tokens that represent technological advancement, new cultural statements. The sector really has, I guess, disassociated itself from just the market leader, offering investors much more choice than they've ever had.
I saw.
All right, guys. So you guys had a wonderfully blessed evening. Your boy Jaime G is out. Stay tuned. I will be dropping a video on Dogecoin later this evening. Peace out.